Hi, welcome in this class. My name is Federico and I'm a trader and a programmer in MQL4 and MQL5 for about 7 years. Now, what you're going to learn in this class? In this class, you learn my strategy for trading the news in the Forex market. First, you learn the trading basics for the Forex market. Second, you'll learn what is Forex, and of course you will learn what is a strategy, where to find the important news to trade, the safest news to trade, and of course we are going to explain them, so the interest rate, the CPI, and the non-farm payroll. Then of course I'm going to show you how I traded those news. Before we start, keep in mind that these are not investments advice. Everything that you learn in this class is only for educational purposes. What is the project for this video? Really simple, and I think that it's really important. You have to post your analysis for the market, for the strategy. So you have to post the before the news and the after the news situation of the market. Also learn from other students. So I think it's really a good thing to post your thought process, your before the news and after the news, even if you don't trade or even if you just trade with a demo account. I mean, it doesn't matter, just post it, so you will learn some things from me and from other students. I think it's a really cool thing to do. Let's go. The first thing that we need to do is to install the MetaTrader 4 platform. In this case, I'm going to use the Alpari MetaTrader 4 platform because I can get a 90% history data from these servers. But you can use every other platform, MT3, MT4 platform that you want for using this strategy. Now, I'm going to give you the setup file for this platform in the class resources. First of all, we need to create a demo account. For doing that, we need to go here, Alpari or accounts, right click, open an account, select demo account, new demo account. And of course, you have to insert your data in here. Then you click next and you're done. How this trading platform works. So we got the navigator here on the left. This is where we have our indicators and expert advisors. If you click here, you will open the terminal. Here you have everything you need for your trading. You have the trade, you have your trades, you have the exposure, account history, news, alerts, mailbox, market signals, articles, codebase experts, and journal. This is where there are a lot of information about your account. So you have your navigator, the terminal, then you have the strategy tester that we are not going to use because you don't need it for this class, but it's where you test your expert advisor, this window right here. Of course, we can choose the properties for the chart from right here, or we can choose them by right clicking and then go to properties. And if you copy these settings, you will have my default template. What is a template? It's a set of properties of a chart. For example, if I go to File and I click New File, GPPSD, it will open with the same properties. So for doing that, we have to go Save Template. You have to create, write default, just default, save, and so every time you will open a new chart, it will open the chart with the same properties as the default template. Okay, now here you can choose the time frame. These are just objects that you can choose. Let's use this crosser. The crosser is used for counting the bars or the points for a market. Keep in mind that in the Forex market, 1 pip is 10 points. Here you can zoom in, zoom out, or zoom in. This we're not going to use this. New order. This is a data window where you have your information for the candle. Here we have the market watch, that is this one. And then we have create a new chart. Okay, these are the most important things to know for the chart. Now, let's go to tools, options. You can disable the events if you don't want the sound notifications, expert advisor, and allow this information so you can use every expert advisor that I will give you. This is everything for the MetaTrader 4. Now we are ready to explain the concepts for the Forex market. Okay, first of all, let's talk about the trading basics for the Forex market. So, the bid price is the price a Forex trader is willing to sell a currency pair for. Ask price is the price a trader will buy a currency pair at. So these two are just prices, level prices. Both of those prices are given in real time and are constantly updating. So the bid price is where you sell and the ask price is where you buy. Where you can find them? Right here. Here you have the bid price for the, let's go to GBP/USD. Now, this is the bid price for the GBP/USD, and this is the ask price for the GBP/USD. Now, what's the difference? They are different because there's the spread between them. If you want to know how much spread there is in a certain market, you can just see it right here. So the spread is essentially the broker commission. We can say that in a few words. Okay, and it can change. Then we have the slippage. What is the slippage? The slippage is essentially when the broker will send your order in the market. For example, if you set an order, you click buy. So for example, let's go here. You go to trading and let's set a buy limit here. Accept. Okay. Now we got a buy limit right here. If, for example, there is a really an explosive movement, the slippage is essentially when the broker will open your position. The difference between your level and when the broker actually opened your position is the slippage, and it's caused by the latency for the broker. I mean, where the broker can really open your position, it will open it. So it's really important to choose a good broker for trading the news, because sometimes there can be a lot of slippage in important news. First, let's talk about lots. Lots are essentially how much money you are investing in this operation, how much money you are speculating in this trade. And for example, 0.1 lots are moves like 1 euros, $1 per pip. So let's go back again and let's talk about what is a pip. Pip in the Forex market is 10 points. What are 10 points? Are just the movement, the movement of the price. So for example, and how you can measure the points for a market, click right here and you can drag up or down, and the number you see subtracted by 10 and you will get the pips number. A pip is just a measurement for us. I mean, it's just for making things easier in manual trading. Okay, so now we know what is a point, what is a pip. Lots are essentially how much money you want to move for every point of the market. The leverage essentially gives you the opportunity of opening more lots with an order with less capital. Really simple, you don't have really to understand the technical terms. Now let's talk about really quick on types of order. First you got sell and buy order, sell stop, buy stop, sell limit, buy limit. The difference. If you buy, let's make an example. If you buy like right here, these are the lots number. If you buy and the price goes up and you close the position, you will make money. If the market goes down and you have a buy order and you close it like right here, you will lose money. The opposite is for the sell order. Now, this is an order that you will open right now on the market. If you don't want to open right now the order, you insert a pending order. Buy stop, sell stop. Essentially, I can put like a sell stop here. So when the price goes down, it will open a sell order. The opposite, I can open a buy stop. So if the price goes up, it will open my buy order. And the opposite for the order is the buy limit and the sell limit. So A buy limit, if the price goes down, reaches this level, it will open a buy order. If the price goes up, you will make money. The opposite is a sell limit. A sell limit, if the price now reaches this level, it will open a sell order. So for making money, you will need the price to go down. Really simple. You have to practice a little bit with these ones. Now we got gap. What is a gap? First, okay, a gap is when there is a distance between the close of the previous candle and the open level for the new candle. We use candles in the market to see how much the price has moved in a single period of time. For example, we have 50 minutes here. This means that we got 15 minutes candle. Each candle is 50 minutes. Open is the level when the candle opened. Close is the level when the candle closed. And low is the lowest level of the candle. And the high is the highest level of the candle. With the Forex market, there is no volume, so don't count that. It's not accurate. And yeah, of course, you have the time and the date for each candle. The foreign exchange market, also known as Forex, is an over-the-counter global marketplace that determines the exchange rate for currencies around the world. Participants in these markets can buy, sell, exchange, and speculate on the relative exchange rates of various currency pairs. Foreign exchange markets are made up of banks, Forex dealers, commercial companies, central banks, investment management firms, hedge funds, retail Forex dealers, and investors. So there are a lot of people that speculate in this Forex market. And first, let me make this really clear. I do not consider Forex market as an investment. I consider it as a speculating market. So keep in mind that this is not an investment. Now, let's talk about the most important pairs that we are going to trade in this class. We got USD. That's all you have to trade in this class. I'm gonna make things really simple because I think that I know that by my experience that the more simpler a strategy is and easier it is to make this strategy profitable. So in this case, we are going to trade just the USD market. Very simple. We're going to trade at 1 minute time frame. So we are going to do the so-called scalping. What is scalping? Essentially, I'm going to explain this term because we are going to do that. Scalping is essentially opening an order and then close the same order in a matter of minutes or seconds. Pretty simple. Okay, let's talk about what is a strategy, because you hear it everywhere. This strategy here, strategy there, stock trading strategies. What is a strategy? Essentially, is when you enter the market and why, and of course in which way, and when and where you're going to close your order, in profit or with a loss. Really simple. Okay, let's see an example of a strategy. Really, this is not a good strategy, it's just an example. I'm going to right click, open the one-click trading the terminal, and I'm going to open a... No, let's go with one lot for order. Now I'm going to open a buy order right here. Here I have my buy order. This is the spread. If I go to the terminal, I can see right here my order. If I click here, the order will be closed. And now, before opening an order, of course, I have to know why I'm opening an order right here and where I'm going to close the order in profit or with a loss. For simplifying things, you can insert a stop loss level and a take profit level. Essentially, if I click on the order and I drag it right here, as you can see right here on the left, this is my SL stop loss. 64 USD dollars, 64 pips. This is of course how your loss if the price reaches this level, and the opposite is the take profit. Of course you drag it from the level and you go up, and yeah, as you can see on the left you got your TP, stands for take profit, 48 USD dollars and 48 pips. And yeah, if I just leave it like this, I have my buy order. If the price reaches this level, the position will close with a loss. Instead, if the price reaches this level, the order will close with a profit. And so now I'm going to see where the price is gonna go. So this can be a really good example. And I think yes, okay. Now I won this operation, and if I click on account history, as you can see, these are my demo positions. That was my order today. It was 14. Yep, $50 of profit. Now I'm going to show you what is a trading stop. Click right on the order and select 15 points. Yes, exactly. What is a trading stop? A trading stop is a program that updates your stop loss if the price moved in your direction by tot points. So you follow the price if, of course, the price goes into your direction. For example, in this operation, I insert a stop loss of 15 points, but there was the spread, so probably it will activate around 20 points of profit. As you can see, the trading stop changed our stop loss value. Then before there was no stop loss, but now it set a stop loss in that level. And if the market goes down, the stop loss will update and it will follow essentially the price. As you can see, it's moving because the price is going down and the trading stop essentially follows the price. Okay, let's see when we are going to close this order. We have also to count the spread. The order was closed because of the spread, and as you can see, we made $5 of profit. Okay, now let's see where we can find the news that interests us. You have to go to the Forex Factory website right here, and you have to go to the calendar page. If you want, you can create an account to synchronize your filters. I filtered the news according to their importance right here. As you see, I care only about these types of news, the most important ones. Here we can see the date, the name of the news, and its current expected and previous values. If you click on it, you can also see the history and information on the news. Right here is the history for the news, and here we can see the details about the news. And yeah, one thing that is important is right here. By clicking here, you can activate a reminder through your email, so you will get an alert 1 hour before this news. So if I click right here, I will get an alert 1 hour before the news comes out. And it's important that you have an account for enable this. Now let's see what are the news that we want to analyze. We got the CPI, that is the Consumer Price Index. What is this actually? It measures the change in the price of goods and services purchased by consumers. This is considered the UK's most important inflation data because it's used as the central bank's inflation target. Consumer prices account for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rate out of respect for their inflation settlement mandate. So you have to understand only that the actual value greater than the forecast value is good for the currency. Really simple. And yeah, now let's see the non-farm payroll. Let's see where is the non-farm payroll. Okay, right here we have the non-farm employment change for the USD currency. Let's see the detail. Change in the number of employed people during the previous month. excluding the farming industry. Actual greater than forecast is good for currency. Released monthly, usually on the first day Friday after the month ends. This is vital economic data released shortly after the month ends. The combination of importance and earniness makes for hefty market impacts. Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity, also called the non-farm payrolls and NFP and employment change. And then we have our interest rate. Let's see if we can find our interest rate. Let's see. Exactly, federal funds rate, click on detail. You can see here, also called interest rates, Fed funds rate. It measures interest rate at which depository institutions lend balances held at the Federal Reserve to other depository institutions overnight. Actual greater than forecast is good for currency. So these are the three news that I care about because they are the most powerful ones. In my case, I use the news only for the USD currency because they are the most powerful, but of course, you can use this news for every other currency. For example, I use the CPA only for the USD currency, but if you want, you can use it also for the GBP currency. So yeah, you just have to be a little bit careful when you use this type of news for other currencies. Now let's go into details about these types of news and let's see exactly the movement that they generate. Okay, let's go. Page. Now let's start with the interest rate. Okay, now what is the interest rate? As you can see here, the name is different, federal funds rate, but if you click on it right here, you can see the information, also called interest rates. What measures? The interest rate at which depository institutions lend balances held at the Federal Reserve to other depository institutions overnight. Actual greater than forecast is good for currency, scheduled 8 times per year. The federal funds rate is one of the news that I trade with, so it is pretty important. Let's go back and see exactly how much movement it can generate. Okay, first of all, I made this expert advisor, this one, just for giving you some history of this type of news. This is the code of the expert advisor, and if you want to do more research on this, really simple, you use it on the back test, you answer the name for the screenshot and the date in which you want to screenshot the chart. In this way you can study a lot of data. So we were talking about the interest rate. Let me give you a little bit more of data so you can understand how important is this news. This is the movement generated by the news. Of course, you have the timer right here. When I took this screenshot with my expert advisor, you get the RSDM 1 minute time frame. So if you want, you can check on the chart to see the movement. Now I'm gonna show you some screenshots that I took with my expert advisor, so I can give you a little bit more of data to work with. Interest rate. This candle is the candle for our news. Yes. As you can see, we have pretty big and explosive movements. But of course, we also have movements like this with a lot of retracement in the candle. Like this, for example, we have a lot of retracement here. Also here, we got really a lot of the retracement. And of course, we have candles with no retracement, as you can see here. Yeah, here's some data for you. And yeah, as you can see, we have a pretty big movement on every time there's this news. Hello, now I'm going to show you the second news that I trade, and that is the core CPI. What measures the core CPI? It measures the change in the price of goods and services purchased by consumers, excluding food and energy. Actual greater than forecast is good for currency, and of course the opposite is bad for the currency. It's released monthly, about 16 days after the month ends. also called the CPI-X Food and Energy, underlying CPI. The way that I trade the consumer price index is the same as the interest rate news. Now, let's just look at some examples so you can see exactly what kind of movement it can generate. Okay, now we are going to see some data for the CPI news, the core price index value. Here we are at the USD dollar 1 minute time frame. Of course, you can chat the data for this news right here if you really want to. And yes, this was the moment. As you can see, we got pretty big and explosive moments for the CPA. We got here a little bit of retracement. In this case, this was the last screenshot that we got. We got this candle, there was positive news for the euro, and then we got this little movement for the CPI. So keep in mind that you don't always get these big movements. There are times when or there's really a lot of retracement, but we can solve that problem of the retracements. But there are also times when there's a little bit movement. So yeah, most of the times we get big movements, but of course not always. Now I'm going to talk about the non-farm payroll. You can call it non-farm payrolls, NFP, employment change. And it's actually what it measures. It measures the change in the number of employed people during the previous month, excluding the farming industry. And of course, actual gradient and forecast is good for currency. It's released monthly, usually on the first Friday after the month ends. This is the last news that I'm going to show you. So now, essentially, you have three news now. The interest rate, the consumer price index, and the non-farm employment change. Now, let's see what movement it can generate. Okay, now let's see some movement for the non-farm payroll. USD, 1 minute. You can check right here the data. And yes, we have a really big gap right here. So we got a really big movement. Then we got this little, I don't think it's really a big candle with a little bit of retracement. That's a big candle. Big candle with a lot of retracement. Perfect big candle. Big candle. A lot of retracement. Big candle. Just retracement. Just retracement. So we got pretty important movement with those candles, but of course you can profit also in these types of candles. Maybe these ones are the most riskier, but that's not really a problem because in this strategy you're going to learn exactly how you can lose small and win high. Of course, we cannot get always a perfect moment like this one, so it's fine. In this video, we are going to see the strategy for trading this news. There are two entry variants, while for exits and lots, there is only one rule that I follow. For the first one, we are going to enter the market with two pending orders the minute before the news. We have the news right here. I open a buy stop right here and a buy stop right here, and it's better if they are 10 pips, as you can see on the left. 10 pips. Okay, 100 pips, but essentially is 10 pips. I don't know, the metadata is kind of bugged. And yeah, we can drag this right here, and yeah, as you saw, you count the distance in points from the actual bid and ask prices. So the strategy is placing a buy stop at plus 10 pips and a sell stop minus 10 pips. Both have stop losses at 10 pips. So essentially they should have the stop loss right here. So if you have to click on modify, write the stop loss level. 1 0 6 4 4 5, bam. And here we have our stop loss that you can modify, of course. Same thing for the buy stop. 1.06478 okay, and then you can just modify it like this. Okay, now we have our orders, our pending orders. So you can place the pending orders 1 minute or less, or even two minutes maximum. Of course, there's another way of doing that. There is, I think, more easily. You right click and you go trading, new order. You select the type of order, pending order, buy limit, of course, buy stop. At price, for example, it was 67595, and right here you put your stop loss and take profit. So in this way, you place the order, and probably it's more simple. Yeah. Now let's delete these ones. Delete. Right click on delete. If the candle news goes up, you have to close the opposite order. You close in profit after there is the explosive moment of the candle. So after you see the explosive moment, it can be like 30 or 40 pips, you close the order, because from that moment the price can retrace. So yeah, that's pretty important. And keep in mind that the slippage can modify the entry level for your order. For the lots, of course, it's better to go to trading, new order. Yeah, here you can also select your lots. It's pretty simple. Stop loss, pending order, buy stop at price. You can also select when you want the order to expire. So if you want the order to expire after the minute of the candle news, you can check this box, and of course you can write it right here. But for the lots, I think that it's optimal to risk like a pretty small amount of your money, especially in the beginning. So with a balance of course, it depends on the leverage that you have. For example, with high leverage, you can open 0.1 lots for with a really small capital. You have to see your leverage, see how much you can open, and for this I'm going to give you this website. Go to this website, Forex calculator tickmill Forex calculator, and right here you can select your account currency, instrument, leverage. For example, let's go with this one. I want to open at 0.1, and as you can see, it moves 0.9 euros for every pip, 0.1. And you need this amount of money for opening these lots with this leverage. So just you can use it however you want. So you can use this website for doing some calculation about risk. I cannot give you the exact lots that you have to risk, because it differs from the leverage and from the capital that you have. So the variant for the entry conditions is really simple. I enter 1 minute or less before the news with a buy position and a sell position, both with 10 pips of stop loss, and of course you close in the same way or with a big take profit. For example, let's say that we have a news right here. I want to go 0.1 lots, sell, buy, bam, stop loss 10 pips. No, this is the DP. Sell, you have to drag it on the other way, like this. And buy, so that, yes, okay. Because you can also set the take profit. So this is the take profit for the sell order, and this is the stop loss for the buy order. This is the stop loss for the sell order, and this is the take profit for the buy order. And yeah, and yes, you have to just wait for the news, and when you have the movement, you close the orders. It's really important. You can close the orders fast. Open your terminal right here, go to trade, and here you have your orders. And of course, for closing them, you have just to X-click. So the point of this variant is simply to solve the slippage problem. Because if you have like 20 pips of slippage, you lose a lot of potential money. Not in the same sense, not in the sense that you lose your money. You may lose a lot of potential money. So for doing this variant, you keep in mind that you need a broker with a guaranteed stop loss. What is exactly? It is a stop loss that when the price reaches this level, the order close, even if there is a bigger and explosive movement. Because keep also in mind that for almost every broker, if you have a really big and explosive and fast movement, the stop loss and the entry conditions may be executed late. So in a few words, you can really lose a lot of money. So be sure to find a broker with a certified stop loss. In my case, I use EG Market, but I don't know if you can use it in your country. So yeah, just do some research and you're good to go. Here we are at the last video. I really thank you for following me in this class. Upload your project, follow me, and leave a review if you liked this class. And also, if you have just a minute, I would really like you to write me what you liked and what you didn't like in this class, both in terms of topics and editing. In this way, I can improve more and more the classes that I'm going to do here on Skillshare. If you want to be a part of this journey, follow me and be ready for the next class.